I first bought Bitcoin in 2013 at $200. My thesis was this is a 10-year bet, and I think it's worth $1 million, but I'm going to discount myself by 90% for the moron factor. So therefore it's worth $100,000, and it's at $200. And I said, this is the best macro bet we will ever be given, and the best macro bet we have ever been given. That was 2013. I was pretty impressed if I look back, because it was exactly the case. So I rode it up, and it went up to 5x from where I bought it. Then it collapsed 85%. And I'm like, fine, it's an option for me. It's a 10-year bet. It then ran up 10x into 2017. 4 years later, I'm up 10x. And I got a bit nervous in the space because of forking wars and other stuff. And I stupidly forgot the initial premise of the trade, which was this 10-year bet, you just run it. Because when the P&L stacks up, you start thinking, well, really, do I want to give this back? But you've got to learn how to do that if you're running long duration time horizons. So I sold out at 2,000, 2,500, and it went up to 20,000 in that run. And people were laughing at me. And I was like, look, I've made 10x. Thank you very much. I've done this really, really well. And then I watched it. And then eventually got the entry point to get back in again, which was April 2020. And it fell back down. I think I got in 6,500 and bought it, from 6,500 to about 12,000 and kept buying it. And it rocketed higher and much bigger position than when I first started. Okay, great. And I still own it today. It's pulled back up again. Okay. So I went back and looked, if I just kept my original investment and not touched it, even with the market down from its high, 50%, I'd have made 5 times as much money. And my bet in 2020 was a lot bigger than it was back in 2013. And then here's the real crux. And me and backwards baseball cap Brian were talking about this before we came on, is like, if you just remember that log channel and the big cyclical up and downs, which is the economic cyclicality, if you just buy within 30% of the low, which is not that difficult, 30%, don't even have to be bottom ticking it. I just calculated I got 30% near the low. If you'd have just added my original bet, which wasn't that big, it would have been 25 times as much performance. And that was the lesson learned. That's why I didn't sell a single thing and I kept buying. My duration really for this is, I will probably take some off the table in this trade. But my duration, my real bet is to run most of it until 2030. That's always been the game, and it remains the game for me. Nobody cares. Markets don't care. The markets are looking forwards. Everyone's obsessed by the recession now. Yeah. It's difficult if you're running a business. It's difficult in that respect. But for markets, nobody cares because it's already been priced in. And no, people can't get their heads around this concept. It's like, everyone's like, oh my God, there's going to be a recession. The market's going to go down. The yield curve's going to uninvert and the market's going to collapse. It's like, tell us something we don't know. It all happened. That's why crypto went down 80%. That's why technology went down 40% or so. Raoul, thoughts on crypto infrastructure products like Chainlink and Graph? I'm also still waiting on that rum bottle I won last year. I don't know why you haven't got it. You need to write to us on the platform and figure out the hard thing's bloody shipping rum around the world. Everyone's got import duties. You can't do it, stuff like that. I'm not the next tier down crypto guy. I'm the macro guy. Chainlink looks great to me. The Graph looks amazing. Everything looks amazing. That's why I'm a shit investor in smaller tokens and VC, because everything looks amazing. So sorry, I can't add value. The only value I can give is alt season is upon us. This is just the start. After that, all sorts of stuff goes up.
Hey, Crypto Street investors, buckle up because the Bitcoin hype train is gearing up for a potential wild ride. Today, we're diving into the buzz around a Bitcoin ETF approval and how it could launch BTC to an astronomical $141,000. Yep, you heard that right. Stick around for the crypto tea. Picture this. Bitcoin hitting $141,000. Sounds like a dream, right? Well, James Butterfill, the head of research at CoinShares, dropped a bombshell in his recent report, and it's causing quite a stir. The key ingredient? A potential Bitcoin spot ETF approval. Butterfill and his research squad did some serious number crunching, analyzing assets under management (AUM) from 2018 to 2023. The result? A jaw-dropping $141,000 BTC price tag if the SEC gives the elusive nod to a spot ETF. Now that's some crypto math magic. Here's the twist. Recent weeks have seen a surge in Bitcoin inflows. Butterfill's eagle eye caught this unusual uptick. And guess what? It played a starring role in his $141,000 prediction. The model pointed to a unique situation where Bitcoin inflows soared despite a drop in Binance volumes. Now let's talk ETF impact. Exchange-traded products, ETPs, in other countries rarely stir the Bitcoin price cauldron, but this time might be different. A Bitcoin ETP is like a golden ticket. It lets investors taste the BTC flavor without holding the actual coin. So $141,000 or bust. Hold on to your crypto hats. About $14.4 billion flowed into Bitcoin recently. Butterfill says if you crunch the numbers, allocate the average, boom, $141,000 BTC. However, he admits it's like predicting crypto weather. A bit tricky, but oh so exciting. In a recent Yahoo Finance interview, Cathie Wood based case for Bitcoin, a mind-blowing $600,000 to $650,000. That's not just bullish, it's crypto euphoria. And why is she so optimistic? Hold tight for the reasons. Cathie Wood drops knowledge bombs. Bitcoin's upcoming halving? Bullish. The 21 million supply cap? Double bullish. She predicts institutions will flock and if the SEC gives the green light for a Bitcoin ETF. It's like opening the floodgates for big money. Wood's not just riding the Bitcoin wave, she's expecting a tidal wave of institutional interest. Quick flashback to 2015. Cathie Wood throws $100,000 into Bitcoin at $250 a pop after reading Satoshi Nakamoto's white paper. Fast forward to today, and that's over $14 million in unrealized profits. ARK Invest is in it for the long haul, and Wood hasn't sold a single Satoshi. Now let's rewind the Bitcoin roller coaster. Year to date, we've seen a hopping 119.27% surge. But wait, profit-taking hit, bringing BTC to $36,440 at the time of this video. The crypto market is a wild ride, my friends. In the grand finale, uncertainty hangs in the air about how much demand will explode once that elusive spot ETF hits the scene. Regulatory approval and corporate acceptance? Slow burns. It might be a while before corporations dive headfirst into the crypto pool. That's a wrap on this crypto roller coaster. Will the SEC sprinkle magic dust on the Bitcoin ETF, launching us to the moon? Let's continue our enlightening discussion with Raoul.
I have a feeling that MicroStrategy is going to trade at a discount to its Bitcoin holdings, because when you have a pure play, because don't forget, MicroStrategy doesn't make a lot of money as a software company. It's all the Bitcoin it owns. So it probably trades as a discount like the GBTC did in the end, as people flock to the better vehicle of the Bitcoin ETF, which will track Bitcoin pretty much one for one. So I think I would steer clear of it because I think it'll underperform. Marty F. Hello all. Hello, Marty. Lovely of you to be here. I hope you're having a fine drink. However, did crypto Nasdaq not price in a recession last year? Yes, because they're forward-looking. What he's trying to say is assets do price in recessions, just some are forward-looking and some are present day and some are backwards-looking. Housing, backwards-looking. Commercial real estate will be backwards-looking. Those are delayed assets. We're seeing that in the crypto land where NFTs pretty much, as I predicted, bottomed last month, a month before, because they lag the ETH economy by about 15 months, much like housing and other stuff lags the traditional economy. We're still seeing, for example, Rolex watches and Patek Philippe prices, which are very similar in kind of trophy assets to NFTs, still falling right now in the traditional economy. And that will continue for a little bit because the traditional economy is still low. Those things won't recover till probably 2025, maybe 2024. I tried really, really hard to make sure that everybody's set up for this cycle. I've tried to communicate it. I've gone out a lot to say, don't fuck this up. Buy and hold, don't use leverage, use cold storage, do the right thing, don't get too speculative, don't FOMO, just don't fuck this up. This is the biggest opportunity we've ever been given. I've said that all the way from 2020 onwards, and in fact, I said it all the way back in 2012. It's the biggest macro trade of all time. Don't fuck this up. And if you're not a crypto person, technology is one of the biggest opportunities we've ever been given, the exponential age. Again, don't fuck this up. Just be careful. Just buy, hold, have a long-term time horizon, and learn how to take pain. And when there is pain, you buy more. Unless something changes the thesis that suddenly we're all going to turn into Neanderthals and nobody's going to use technology ever again, it is going up. It's as simple as that. And unless something changes that we're not breaking the financial system and that the internet has disappeared, we will go to blockchain technology. It's as simple as that.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.